we are 1 minute time frame. Okay, this is my main time frame in which I easily try to identify manipulations. This is all I want to see. I want to see a manipulation. Okay, so what's a manipulation? What I tell you before, this one. Okay, grab a liquidity. Could be this one in this way, or could be also wolf wave pattern. Wolf wave pattern is this one. Okay, it's a dynamic liquidity. So this is the horizontal line is static liquidity. The line, I don't know how to spell it, to say it, is dynamic liquidity. Okay, this is only what I want to see. Okay. Okay, so I usually not trade during session opening. Okay, so I just wait at the, half an hour. Okay, so this is a liquidity. Okay, I don't remember the chart. Okay, guys, so I'm not prepared to do this. Probably I remember the trades, but I don't know what's going on here. Okay, this is the liquidity. To consider a liquidity sweep, a new range, I want to see price going up here. Okay, we are okay, so look at here, we are not going higher, we have liquidity sweep here. Okay, this is a bearish zone that I want to consider. Okay, we are on 1 minute. If we don't have if you don't have second time frame, how we can do? We don't want to see any trigger. Okay, I don't consider any trigger. I just, if we have right conditions, I just enter with the limit order. Okay, at least at the 50% or higher in case of short trades. Higher, I mean when I have liquidity inside the zone. That could be this one. What's liquidity? Liquidity is a wick right beside a fair value gap, for example. Okay, fair value gap or imbalances are very important because they work like a magnet, because they are unmitigated zone as well, in which price usually tends to cover, to confirm that we are in the right zone, okay, in the right market direction. So this is the good zone, very good zone. I don't care about time frame, I don't care about bias. Now, okay, we are on the bearish side, but we are breaking, to be honest. Okay, look, we are breaking, and maybe we are moving upside because this is the last low that we broke, and we don't have broke any lows anymore yet. Okay, and we are accumulating inside this area, but I don't care, probably I'm wrong. But the beautiful, the very good thing of this model is when I get the stop loss 9 times on 10 times, it means that I'm facing a reversal trend, so I can take immediately or in the next 1 minute, 2 minutes, a trade on the other side because it's reversing. Or I am the liquidity. Okay, I am here, so I open a trade here, which is really stupid, I know, but it will happen. I will show you that this could be, my stop loss. No, I forgot, so this is short. Okay, so for example, this is my stop loss. I am the liquidity of this setup, and is moving down, but I can re-enter once I know that I am the liquidity. Okay, so anyway, this is the zone. This is the zone because we have liquidity, we have displacement, we have fair value gap with the liquidity inside the fair value gap. Perfect. So this could be a good zone to enter blindly. Limit order, stop loss, just 1 tick below the high. Okay, the take profit is always at least 121 or 1215 or the low of the zone that we previously tested. The zone of the range that we previously broke. Nothing happened, and here we have a lower time frame break of structure, which is good because it confirms that we probably are on the right side of the market. Triggered. Now I know I don't have to do anything, because if price is going here, invalidates the zone, so we're probably moving bullish, and we have our take profit. Look where price reacted on this fair value gap pattern without any trigger pattern. I don't like the trigger pattern because it's emotionally, I'm a very emotional person. Okay, so trading is not very good for me, to be honest. And the trigger is the thing that I hate the most because it is guided, okay, by the emotion. So with a blind limit order on the 50% or on the liquidity fair value gap, it eliminates emotion. Okay, let's move away so we can delete this one. Okay, so same thing, we are looking for a manipulation. Look how this zone reacted. Beautiful. Okay, so let me check if we miss a manipulation. So for example, the breaker structure that we got before, okay, this is another zone to consider, okay, because we have manipulation, displacement. Okay, look at this pattern. It is always the same, guys, always the same. Liquidity here, breaker structure here, okay, displacement, maybe up, yeah, we have a fair bit of gap here, means that buyers are strong. And when look where price reacted, the zone is here, so we can set a limit order here, we take profit here on the, sorry, okay, and this is a TP. Okay, another take profit. That's the reason why I tell you that risk management is everything, because obviously if you enter on the same size here and here you have a huge profit and here you have a small profit, but if you get stop loss here, obviously you have to do 3 of this TP to cover this loss. So same risk, $100 here, $100 here risk. So we have, is it clear everything, guys? I'm too slow.
Yeah, I just wanted to ask, do you use like you sold monthly? So let's say there's a time and the trade is triggered, but let's say another time and again, maybe the zone is big and price comes back again. So do you look for second trade or you just ignore them?
Sorry, Raz, I didn't understand because something's not working. I listen to your voice like as a robot. So could you please?
Can you hear me now? Is it better?
No, could you please type the question inside the chat? Ah, sorry, you have already.
Oh yeah, in the chat.
What was managed manager? But you still lost placement. You did mention fixed raises. So what is based against volatility? No. I do not use any indicator, any ATR, nothing. Okay. The concept is always the same. I always wonder when my analysis, when my setup gets invalidated. Okay, if this is a zone that tells me that we are on the bearish side, okay, this zone, my stop loss is here. Okay? Because I know it's the structure tells me that if price is building something over here, above here, sorry, we are moving long. So my analysis, my setup gets invalidated. My fault is not, is market is moving. I always take stop losses because price always broke the structure, breaks the structure. Do you only use each zones once? Yes, of course. If there's unfilled FOG still available in the zone, for instance. Okay. My rule is when we get the 50% of the zone, I do not use the zone anymore, even if we have a further gap. It could happen like here that the zone is still valid once we got touched twice, because remember, sorry, a thing that probably I didn't tell you. Here we have the first touch of the zone with a small low time frame, with a lower time frame breaker structure here. Okay, so we have 1, 2, 3. Okay, yeah, could be good, but you know, when price when price touches so many times the zone, means they probably want to go and break it. Okay, so I want to see basically a touch of the 50% of the zone. Okay. Understood the end of the zone for the stop loss now. I tapped before you mentioned it. Okay, perfect, don't worry. Okay, your question was good because I just saw, oh sorry, no, I just saw this zone that could be good as well. I mean, this is liquidity, and this is displacement, and we broke the structure of this zone. So this could be another zone for us to take, to care. We have the first touch of the zone, because price, no matter wicks or body, market is fractal. So this wick that you see in the 1 minute time frame, on the 5 minute time frame, on the 5 seconds time frame, on the 15-second time frame, this is a body closure. Okay, so we broke the zone, we retested the zone, and we go with the strong movement. Okay, down. Okay. So we know we have the zone, we can extend it because it's always good. Okay, always valid until we get mitigated on the 50%. Look at here, liquidity, wolf wave pattern. Okay, this is another zone. I didn't got the daily bias. I don't know in the higher time frame, 50-minute time frames, where probably we are inside or close the edging session low, and always, not always, but a lot of the times, if this is an edging session in which price make like this all the night, okay, during London session, start here, price is moving from one side, grab the liquidity of the New Year session, of the Asian session, to go on the other side, and probably make the same thing to go higher during the New Year session. Maybe here we are on the Asian session low. I don't know. I don't care, to be honest. But this is something that I always saw at the beginning of my trading session. Okay. So this is another zone that we have to keep in mind. Now we want for it to validate it. Okay, how? Because I want to see a touch, I want to see a test and go down again, and that's it. So we have this liquidity. Okay, so we don't have any fair value gap on this time frame. What I'm doing usually, I go on the 15-second time frame looking for a fair value gap. Trading is a matter of confluences, sorry. Okay, so I just want, the more confluences we have, more odds in my favor I'm going to have. Okay, so liquidity here, we have this zone, we have a displacement. Look at the green candle, okay, the yellow green delta candle here. These are trapped buyers. Okay, I want to add a tool, okay, which is not necessary but helps you to better understand the possible zone in which price could react. Fixed range volume profile, from the low of the range to the candle that broke that low. Okay, price give me a profile like this. The yellow line is the POC. You know what POC means, guys? Point of control. Okay, so the huge amount of contracts in this zone are here. Okay, so when we're talking about supply and demand zone, and above all now, most of the how can you say, the DTFX traders call it origin, the market called point of control or value area is the same thing, and you don't need volume profile. Just look at the chart and look at the amount of the candle concentrated inside the zone. Okay, but this is the origin, the real origin of the move with the point of control. So I'm expecting that price is going to react probably to the zone. Okay, so sorry, blindly here, take profit here. Okay, let me remove this. What you see here we have a strong bullish displacement. Okay, I'm inside the market, with the trade. Okay, everything is good. Okay, we have confluences, but this is strong movement. So after this movement, the strong bearish trend, what you want to see, you want to think that it's possible a retracement. Okay, it could start here right by now, but anyway, we are inside the market. Okay, we get our first stop loss. What does it mean? It means that this is the zone that we are looking for. This is the liquidity. Okay, wolf wave pattern, liquidity. And to be honest, on the lower time frame, a good zone could be this one. So we are moving bullish, but remember that we have to test the zone. This is an unmitigated zone. We don't have any fair value gap here. Do you remember? So the fair value gap is not crucial, but it's important. If you have the fair value gap inside the displacement, it's a good thing, I mean, okay, to validate your entry. The fair value gap is here, okay? We are moving bullish now, yeah, I know, of course, okay, but this is an unmitigated zone. Let's take a volume profile, where? From here to here, okay? So the profile is this one. It's a B profile. What does it mean? Yeah, this is the concentration of the most part of the contracts on the volumes. But you know, my rule is no matter what happens below the 50%, I just want to wait for the price to reach the 50%, and this is the fair value gap. So to be honest, we are fair value gap. We are inside the bullish zone. I wait for the price to reach this zone, risking half a size with a 2.8, okay, 2.5 risk to reward, okay, and that's it. I'm not prepared, okay, guys. This is how market works, okay. It was good also 50%. A lot of the times I miss the trade because I want to take. My aim is try to get the drawdown as possible, lower as possible, okay. I prefer not to take a trade here on the 50% because I see a fair value gap, but a lot of the time price simply make this boom, okay, perfect, and we have 2.5 with half size, so 1 is 1, okay. Some of you could tell me you consider the zone because, you know, we have a big displacement, we have fair value gap. Here we have liquidation. Yes, of course, you can do that. You can do that. But you know, when I see this small zone with this all fair value gap to fill with one zone, because at the end this is one zone to fill to mitigate, I do not feel comfortable enough to take the trade. But I'm pretty much sure that this zone for this trade maybe is going to work. Okay, so 1-1. No. Okay. Oh, sorry, no, guys. We are 8:30. Okay. So 8:30 for 15 minutes and 9:30 for 50 minutes. I do not trade because there is too much volatility for this model. Oh, I mean, inside the 15-second time frame. Okay. Obviously, market is structural, so everything works in every time frame. But obviously, opening session and above all news, high impact news, have a different weight, okay, on the lower time frame respect that against a higher time frame, okay. So I do not trade during US opening, during high impact news. Anyway, this could be a zone as well, inside the zone that we already mitigate, but as you can see here, we have a triple max. I don't like it because you know, this is a clear liquidity that needs to get swept, okay? But let's consider anyway. We have a fair value gap, we have a displacement, we have the liquidity that gets swept as well here, okay. So but we are approaching probably the zone. So what about the zone that we don't mention before? So on the 1 minute time frame, we consider the higher one. So price broke out the zone, re-enter the zone, generate this liquidity. Okay, here it's could be a good pattern to enter. We always want to see where the potential. I know. You see, guys, price reacted very good to the zone. Probably now we're going higher. But I don't care, I don't enter here because my rule is wait for a 50% to get mitigated. Okay, 3. Okay, so probably this is the news here because, you know, it's 9 o'clock. So this is not valid. But anyway, okay, I will tell you another thing. Okay, so well, no, yes, not yet, not here. Okay, so we missed the zone. This zone is ready to mitigate, and I hope you saw the zone. I hope you see the zone, because we have liquidity. We have the same pattern: 1, 2, 3, 4, 5. Okay, price or guys, man, sorry, there's no fucking way. Everything, I have to pay everything for everything. We have 15 minutes, but you know, I didn't remember that everything is fucked up now. Fucking hell. Do you know another server to use? Let's move away. Let's keep on. So, in the meantime, Discourse is free, I think. Well, really? We can do in Discord as well. Oh, no, how can I do this? So maybe in the section vocal channels, I suppose. I will do this we'll try this in Discord once the Google Meet doesn't work anymore. So we have this zone as well, in which the zone we have retested and going up probably will not be tested again. So huge displacement at 10. Probably we have a news, or I don't remember if this day or the day before. Okay, so for example, I see this, so probably this is a good zone to take. Okay, here, in fact, as you can see, already mitigate the 50%. Okay, so this could be good on the 15 second. Let's move on 50 seconds. No. Sorry, we have a news here, so I don't like it. I'm sure I will not take the zone, this trade, because during the news. So 1 minute, if you use 1 minute time frame, you have 2, 3, 4, 5 days, 4, 5 trades per day. Liquidity, wolf way pattern as well. We have this zone. We have a fair value gap here. Let's have a look with the fixed volume profile here. So we have this wall region, which is the real origin of the move in which we can have a trade. Price, okay, so price re-enter and go out the zone. So the zone is confirmed, and we get our TP. Oh, sorry, I forgot to mention to set stop loss and the take profit, which is here. Okay, price reacted beautifully on the fair value gap and moved down immediately. Okay, now wait for the next liquidation, the next manipulation. Okay, so one thing you have to keep in mind that fucked me so many times. This could be a manipulation, and maybe it is working here. Okay, as you can see, because we have price grab this liquidity and this liquidity as well. Okay, here, then move down, breaking this low. So the zone is now this one. Price grab the 50% and move immediately on our TP, which is two of this. Okay, yeah, here the entry, and the TP is this one. I do not trade here just because I have this fair value gap here. Okay, the first imbalance usually make a new high. Okay. Well, to be honest, it's already been mitigated, but anyway, I don't feel comfortable enough, of course, of this zone, because we have all this zone to get filled yet. Okay, so and we are inside a bullish trend, so I probably do not take this. I'm not an aggressive trader, very conservative, so I miss a lot of trades because I don't want to take so many trades, okay, if I don't feel comfortable enough. As you can see, the trade had worked, but you know, this fair value gap had worked as well, because what I suppose that this fair value gap pushed the price up again. But we have another zone here. price enter the zone. We don't have any break of structure, to be honest. Okay, now we have it. So the zone is very good. Why? Because we have fair value gap as well. Okay, I mean, I repeat, it's not necessary, but it's good to see it. So let's take a first fixed volume profile. Okay, I don't like it so much. Everything is volume here, so I blindly wait for this. Okay, the fair value gap is quite good for this. Without the trigger, okay, price take our TP, our trade, maybe not, maybe yes, yeah, take the 50% and go up. Okay, so we have 3 trades, 4 trades, we have 3 TP, 4 TP, and 1 stop loss. Okay, now guys, okay, this could be another zone, to be honest, because we have fair value gap, we have displacement, this, okay, price re-enter the zone, lower time frame, or middle time frame in this case, because we have 1 minute. Break of structure, we have this liquidity, okay, fixed volume profile, we can use this one from here to here. We have the POC here, has already been mitigated this zone, okay, so you know we have this strong fair value gap with a strong displacement. I'm sure that, or if this zone works, or we are facing a reversal, because we have a strong bullish power here. If this zone is going to be broke, is because we have a stronger bearish pressure on the other side, okay, and that's what it was. Okay, let's have a look if probably, okay, we are again the zone yet, okay, we took, no, sorry, too many drawings, no, okay, we have a stop loss here because the trade was this one. Maybe here with the trigger we can avoid the stop loss, okay, but now we know that we probably reverse, okay, we are on the bearish side, and to be honest, I have to recognize it before, because we have manipulation here and price is going down with a strong displacement, okay, so you know, when you have this kind of thing, this in the higher time frame is an implied fair value gap, okay? So usually the reversal starts with this kind of movement, okay? Usually from 12 to 1 during lunchtime, this model gets the most part of stop losses. It doesn't work very good, okay, but with 1 minute time frame during the New York PM session, you have you have 3-4 setups every day per asset. Okay, we missed 2 at the end. Okay, doesn't matter. Let's have a look if we miss something, because you know, when I have to explain, probably I'm not focusing on finding the right setup, okay, but as you can see, for example, every time you see liquidation, a grab a liquidity like this one, okay, potentially everywhere, and when we have a displacement, it's always a zone to consider, okay, like here for example, okay, and this could be good on the 15-second time frame, for example. So we go outside, we re-enter, probably we get a lower time frame break of structure, and here we have our TP, our trade, okay, without the trigger, then here, so the zone, okay, this is the zone, we go back, we test the zone, we have a lower time frame break of structure, which is not necessary, to be honest, okay, but you know, helps to identify the zone, to validate the zone, take profit, entry, stop loss just 1 tick below, above the high, and this is another TP, okay. This is not a zone because, to be honest, it did liquidate anything, Okay, if we have a new high here and then this is going to be liquidated, then this could be good as a zone. But you know, here there is nothing to liquidate, to be honest, so I don't like it. This is okay. I highlight the zone. Okay, I have all zones in the lower time frame. Okay, let me see if we have a chart. Yeah, okay. Yes, regarding trigger entry with set limit of yes. So now let's move on the 15-second chart. Okay, and we are going to see the same trades. Okay, on the lower time frame, and we are going to add much more trade, because I want to tell you how you can trade using trigger. Okay, okay, so from here it's a little bit slow. Okay, we are here. First zone is this one. Look at that 15-second time frame. I use 1 minute to find the zones, okay, but obviously on the 15-second time frame there are much more zones, and the clearest I take the clearest ones to just, you know, to add more trades. That's the reason why I have 7, 8, 9, 10 trades per day. Okay, look here, we highlight the zone on the 1 minute time frame. Okay, I told you before, we have to see a strong bullish pressure on liquidation. When we want to see a liquidation, we have to see a manipulation, immediately followed by a strong bearish displacement. Okay, this is a clear manipulation. Okay, the trigger that I use the most is inverse fair value gap, which is a very common trigger, I know, but it's not important trigger. It's important where the trigger is, where you identify the trigger. So what does it mean? You know, fair value gap here, fair value gap on the bullish side, fair value gap on the bearish side. So I just want to see the first break of the last bullish fair value gap candle in case of short. Okay, once we broke this candle with another fair value gap, or even probably also we don't need a second fair value gap, but once we close here, we know that this is an inverse fair value gap. Okay, I don't wait for this fair value gap to get tested, even if most of the times it works. I just want for the price to test the candle that create the last fair value gap. Okay, this is the trigger, simply. Obviously not here, because this is a manipulation. Okay, this is not a good zone to, I mean, we are facing the manipulation, so we have to build the zone yet, so it's not the right place, to be honest, sorry, but this is an example. Okay, we have this zone. Okay, we have this zone, and we have this trigger because tap the 50%, the first trade here. Look here, same thing, we have this fair value gap. Okay, and once we broke the fair value gap, we trigger and we go up. Obviously I don't enter here, guys. Okay, I don't enter on this retest, because we have already taken the take profit. Okay, we have already tested the 50%, so the zone is not valid anymore. Okay, you can also entry here once the candle that broke the fair value gap, the previous fair value gap, close. You can enter. Okay, the important thing is always wonder where my analysis, where my setup gets invalidated here. So the stop loss. Okay, and you have to be sure that your take profit will satisfy the risk to reward ratio that you impose to yourself at the beginning. Okay, like here we have fair value gap. Yes, of course we have fair value gap. This is a fair value gap, so once we close below the fair value gap, this is another trade to take. And I always not always, but I often do a double trade in the same zone. When I got confirmed that the 50% is going to work, okay, and I know because we have fair value gap here, and we have the candle that close above the fair value gap, invalidating this fair value gap, I can enter. Obviously the stop loss of this trigger is not here. Okay, this trigger gets invalidated here. Okay, this is a quick scalp that guarantees you a quick profit, okay, in which you have to be fast. Once you fill, and once you get I don't know, 1-2 points, okay, you move to break even your entry. That's the reason why I have so many break even, so many loss trades. They're not losses, they are just, you know, I move the stop loss just below the fair value gap, for example, okay, and price quickly turn back, get me outside the market. It doesn't matter. I mean, it's just a few very small loss that I want to take if this is for increase your profit when your trade is good. Okay, so if we don't enter here, we have this trigger, stop loss here, always 1-1 or 0.3 here. Okay, so the higher of the displacement, always 1-1, to be honest, always 1-1. This is if you don't have to stay for a long time in the market, which I don't want to stay in the market. Okay, so second trade is this one. So we have this zone, okay, we have the first liquidity, which was here. Okay, we have a fair value gap here. Yes, we have a fair value gap here. Okay, so you can enter here, stop loss here, and 1-1. Okay, I'm pretty much sure I do not enter here, never, because we do not mitigate the 50%, and we have the displacement. I mean, this is a falling knife you try to catch. Okay, but anyway, it is, you know, it's a take profit as well, so you can leave it and you go down anyway. So priced up the 50%, okay, of the zone. The fair value gap is this one. Okay, we know when we have this candle, obviously. Okay, so we broke here the fair value gap. Now you have to wonder, where is my TP? My TP is here. Okay, where is my stop loss? Is here. I have enough space. Yes, I have. It's 1.3. Okay, I can to reduce. I mean, to have a less drawdown, which is limit is crucial. You can wait because you have a huge displacement here. Okay, you can wait for the price to retest this structure, because the 50%, the 50% is always valid, also in the smallest zone in the lower time frame. Okay, so when I saw this huge displacement, and look, we have a fair value gap here as well, so you know we are against a strong bullish move. I just want to wait for the price close on the fair value gap if you want, okay, and re-enter on the test. At least we have already if we have already reached our TP, which is this one, I do not consider anymore the zone, okay, because we already mitigate the 50%. Okay, but in this case we can enter here. Above all, we have another fair value gap here, and we know that the fair value gap is a magnet. Price tends to retest the zone. Okay, tends to retest the fair value gap, mitigate all the unfilled orders that leaves here, and it goes down. Okay, obviously this was a stop loss to me. Okay, if I enter here, stop loss here. Do not move stop loss, do not leave your stop loss. You have to calculate the risk to reward. So, I mean, is everything done here? Okay, maybe when price is going here, you can move your break even, your stop loss to break even, probably. Okay, no, sorry, but when we have a strong displacement like this, I just want to wait for the price to re-enter, to retest, and it's a very quick move. I mean, you know, you have to decide quickly what you want to do. That's the reason why I don't like so much the trigger pattern. Okay, and if I take the stop loss, it doesn't mean that the analysis is not good. It's really good. We got liquidity. I am the liquidity in this, for this instance. Okay, for this example. Okay, here. This is the zone, the previous zone. Sorry, this is the zone. Previous zone, we have liquidity, we have break of structure, price re-enter, take the 50%, fair value gap invalidated here. And as you can see, price go down, same thing, okay? I do not enter here because maybe, or maybe yes, to be honest, because I have take profit right here, so it's a very huge take profit. So yeah, 2.75 to be honest, I enter here, okay? But you are very conservative, just re-enter on the retest of the candle, on the last bullish candle. This is aggression, okay? Aggression, price want strong bullish power to move price way up, trapped buyers and go down. Okay, everything is clear, guys. Okay, here, second zone, another zone. Okay, same thing. So we have this liquidity, we have the 1 minute fair value gap here, and look at the fair value gap right back here. It tells me that there is zone that have to mitigate it yet. Okay, so I don't know if I want to enter here, but anyway, I found out there is a pattern here. So long at the end of the candle, closing of the candle, stop loss right back here, 1 to 1. I have it. Okay. Quick scalp move. When do you prioritize which entry to use? You know, before, when price is moving down inside the zone, I always said that the take profit stop loss to this one, okay? And I try to visualize until when I can enter, until which price level my entry will satisfy the risk to reward ratio. Okay, if I have a pattern like this in which if I entry, I satisfy the reward ratio, I enter. It's a very visual thing, okay? Because we are talking about 15-second time frame, which means that the retracement to enter, not to enter, take place in 5 seconds, 3 seconds. So I mean, it's very. I mean, it's a difficult thing that I get, in which I get better with the time, by time. Okay. So it's not so easy, to be honest. If you use it on 1 minute time frame, is pretty much different because you have 1 minute to decide, or 30 seconds to decide, which it's enough time. Okay, that's the reason why I repeat. I prefer to enter maybe without size on the 50, blindly on the 50. Okay? I know the power of this model is that when your analysis, your setup get invalidated, which is here. And another thing I didn't tell you, I want to tell you right by now, is that look at here. This is a beautiful example. So I enter here on the 50 blindly. A stop loss is just one take below. I know it's not an example. It's right. Let's suppose that this is the zone, and it is a zone, to be honest. No, it's right. Okay, my mistake is before. I mean, this is the zone. Okay, so I enter here on the 50%. Okay, probably it didn't take profit. Okay, it's not a profit. Take profit. Okay, let's suppose that it didn't feel the profit and go down. It go down, and take the stop loss. Okay, so obviously you have to set your stop loss, never move, because this is why you blow your account. Set the stop loss, the stop loss, but as you can see, we don't have any closure below the zone. Okay, this is the liquidity. You get the liquidity. So when I told you before, or this model is good because if we take the stop loss, it means that we are going to reverse. So now I know that price is going down. Or you get the liquidity. You are the liquidity. And if you are the liquidity, it means that price is moving up, is moving in your favor. Okay, as you supposed before. Okay, so once we get the stop loss and we wick it out, we have this wick. We just wait for the pattern to come. Which pattern? The same pattern. Oh yeah, fair value gap. We have fair value gap. Price close below fair value gap. Maybe it's too far, but when we wick it out in the zone, it means that the following movement will be stronger. Okay, so we can accept a drawdown. We have only to recover okay, the loss that we just took. Okay? So we don't need to make thousands of dollars with this move. We just only to cover the previous loss. So don't be greedy. Make a one-to-one trade just to cover the loss. Or if the closing FUG candle is too far, like here, just wait for the retest of the candle of the bar, okay, with the bearish fair value gap, like here. Okay, stop loss here and one-to-one. Okay, this is a good thing to cover the losses. Right? It's good. Everything is clear, guys.
Yeah, very clear, very good. Thank you so much.
Next trade. Why you have? Okay. Now you have the stop loss here. With the trigger, you can avoid the stop loss. Okay, because you have another confluence to add. So if this is the zone, if this is our 50%, okay, so price re-enter here, okay, sorry, break of structure here. So this is the liquidity. I always wait for the 50% to be touched. And how can I avoid the stop loss? This is the fair value gap. I wait for this. Oh, okay, I don't know how to avoid this stop loss, to be honest. I wait for the fair value gap to get filled, to get inverted, which happens here. I thought this was not happening, to be honest. So I enter here, and this is this stop loss over here. Here we are in front of reversal, so you have to take your stop loss with this model. You have to take stop loss. But it's a beautiful stop loss because it is telling you that we are going to be bullish right by now. So this was another 10 minutes. We have 10 minutes, guys, but it's good. We have the zone. Let's see if... Okay, so here we don't have any pattern, to be honest, any trigger. Probably this one, it's difficult to see. This is a very small gap, so we can enter here if you see it. We are 8:30, okay, so this is not a good time to enter. Okay, but basically the pattern is this one. Okay, nothing more. It's not difficult. It's a fair value gap. Also, delta volume can really help you to, I mean, identify the aggression, the climax. Okay, have you ever heard about Richard Wyckoff? If you want to understand all the climax, the aggression, absorption, all that stuff, which is very, very useful because it gives you a logic behind the candle in terms of volumes, which are the things that move the market, basically. Okay, Richard Wyckoff, it's a very good thing to learn. Okay, it's a trader that lived 100 years ago, and from that time he really understood the market, which is very actual right by now. Obviously all the schematics are changed, but the logic behind is the same. Yeah, that's pretty much it. Okay, thank you very much, guys. I liked this experiment.